welcome back to the Crypto Simulation. I'm the Gaussian Snake, and today I'm going to address the issue that's been percolating all over the internet, which is, are we about to head into a bear market? Is the bull market over for Bitcoin? I'll let you know what I think about that. While we're here, join my free Telegram channel, the Snack Pit. The link to that is in my video description. We do daily market updates. We have a great community there, and we release information about new projects, all kinds of great stuff happening over there. And it's completely free. We'd love to have you. All right, let's get started. Well, when you look at Bitcoin on the 2-week, do things really look that bad? This is what's been happening over the past few months compared to, say, this drop here or this bear market drop here or this drop here. I mean, things don't really look that bad, do they? And the fear and greed index right now, I checked it this morning, was at 74. So people are starting to panic, and all we've really been doing is just ranging for a few weeks. I mean, it is somewhat similar to what happened in 2021. Something between 2021 and maybe 2019, sort of like a slow bleed or, mixed in with some kind of distribution phase. More like kind of been more just ranging, honestly. So let's take a look under the hood and see what is likely for Bitcoin in the coming months. We did talk about this in a previous video, but I'm just seeing so much FUD all over the internet right now, all over YouTube. I feel like I need to address some of that and see if it's justified or not. Now, I'm not saying that price is going to go like on a rampage to the upside or anything like that, but should we have cause for concern that the bull market is over? That's the main thing I want to address here. This is the 2-week price momentum oscillator for Bitcoin, and it is probably the most reliable indicator I have as far as being forward-looking at extremes. You can see that we reached the top of this almost a value of 100 in February, late February. This was a warning that price weakness was coming, and that's exactly what we got. We got price weakness. Granted, we had our bump up in March. Anytime there's a bump up, it can result in a higher price. But the bulk of our upward movement happened, believe it or not, from September of 2022 all the way to February of 2024. We had the most green. And sadly, I believe we're about to head in the other direction now. That does not mean our bull market is over. Let me be clear about that. That doesn't mean that at all. If you looked at what's happened in the past, what you can infer from this is that there's probably a very substantial drop coming. I talked about this in my last video, but I'm going to talk about it again here because I just feel like this really needs to be emphasized. We hit the maximum of our price momentum oscillator in May of 2011. That was it for that cycle. That was a very, brief cycle, initial capitalization. We got a nice red median line on the price momentum oscillator. And then we zoom back up to the top for our next intermediate cycle peak in March. This is not that dissimilar from what's just happened, right? Going from September of 2022 to February of 2024, you can see we made a much more dramatic move from December of 2011 to March and April of 2013. So we again got a substantial drop. We got some red on the price momentum indicator, but then we had another leg up later in the year. And this is something similar to what I think is likely to happen this cycle. Something kind of like this is kind of my base case. It's not going to play out exactly the same way. I mean, it already hasn't, but I think there may be some similarities to this here, where you get a substantial amount of red, but then you have another final run up later in the year. And not only that, but we got a bounce here in January 2014. I think we were already in a bear market at that point. Another bounce here, bounce. That was all during a bear market. Hit our bottom in January 2015, and then we had a very steady run up that led to our major cycle peak in 2017. Then we got a big amount of red, just like we did here, bear market. And then we jumped up in 2019, got a fair amount of green, and then a little bit of red, and then another green leg up, which corresponded to our April 2021 top, and then just one last move above red. This was in 2021, November, marked the end of that bull market. So I do think that we could be pretty close to the end of our bull market. Maybe I'd say halfway through it is a reasonable thing to think, that this bull market may not have much life left in it. That's reasonable to say, but that it has no life in it and that we're just heading straight down like we've done in the past, like in 2011, that was understandable because it was initial capitalization. 2017, we spent so much time ranging, that we never got above the red. But you can see that in 2013, we got above the red. You can see that in 2019, we got above the red. You can see in 2021, we got above the red. So there's a pretty good case to be made that we're going to get above the red should some more red form here. Now, what has never happened is that we just went straight back up after we've hit above the 88 level. So we should brace ourselves for some red to form here over the next few months. And while I've made predictions in the past that, altcoin season could potentially begin late spring, early summer, I think some of that might have to wait. If this is going to play out in a similar way to how it's played out in the past, then what we're probably looking at, let me see if I can get, well, maybe I can just change the color after I draw. We're going to get probably some red, right, in the chart. And then maybe, I don't know if it's going to last all the way to 2025. Ignore the timeline on this, okay? But maybe what you see after that is, a little bit of a spike before coming back down again. And it's that spike, and this should be green, so let me redraw that. Sorry, this CMO thing gets in the way and I can't take it out. You see that you get a little bit of green, and then, let's see it. Whoops, sorry about that. Let me just move this over. Oh, I can't. Okay. Well, you guys are following along in the video, so you kind of catch the drift, and then we come back down again, right? Red. So again, I've exaggerated the timeline on this. I don't think it'll be this extended by any means. That's an exaggeration. But let me just get rid of that. Okay, but we have started to draw some red, so which has been my base expectation for quite some time. So I think it is likely to see the price momentum flip. It already has flipped bearish, by definition being under red. And I think it's fair to expect that this might come down further. And with Bitcoin price, that could mean that this is kind of, a big distribution phase, and we get a drop maybe similar-ish to what happened in 2021 mixed in with 2019. Something that could represent like a slow bleed. You'll notice that we don't seem to fall quite as hard now as we used to in the past when we go from green to red. Like, it was a pretty nice transition in 2019, green, red, and then we even got enough green in late 2021 to get another spike up. So I don't feel that this cycle is necessarily done and over with, and we're heading into a bear, and this was just a triple top cycle extending all the way back to 2021. I don't feel that is likely, but I also don't think that we necessarily have a ton of time left in the bull market. So I think at the very least, we're probably halfway. We may even be a little over halfway in the bull market. And I'll be looking at things like the Pi Cycle Top Indicator, MVRV Z-score, coin value days destroyed, and other topping indicators when, if and when Bitcoin gets another leg up. Now, when might that happen? If I were to just go off of this chart here, it's a little hard to tell. Intuitively, I'm thinking the fall is probably where I'm looking, like late summer, early fall, and I'm kind of kicking the can down the road on that one because I think we need some more corrective time. We need some more red on this chart, and I think a substantial amount of red, right? Not just a little bit of red like we got here, but we hit the 100 level, so we need some more red. I'm thinking 2013 would be a good place to look. We hit the 100 level here, and we got a fair amount of red. We had a 6-month lull, so if we get a 6-month lull again, which I think is potentially likely, we're not looking at price action getting bullish probably till the fall. Okay, and we're looking at probably a drop even further in Bitcoin price. And is that a bear market? No, it's just a lull. It's a long lull. And so let me discuss what I think could happen with the Bitcoin price. Okay, so again on the 2-week time frame, because we're kind of zoomed out here. All right, trying to get a little bit more spacing so you can see months, but maybe we'll wait on that. I guess the timing isn't really that important. It's just more about where are we likely to drop. I think there's a really good amount of horizontal support right now between 45 and 50K. In fact, if you pull up the VRBP, I haven't looked at this in a while, there's definitely evidence to suggest a really good amount of volume support exists there. But it could take a while to make its way down there. So, I am kind of the opinion, this is why I call this drop that we're very likely to be in, kind of a blend of 2019 and 2021, because we are likely to see something different than what we've seen before. I mean, it happens every single cycle. Maybe let's pull out the path drawing tool. So again, not paying too much attention to the time frame that I'm doing this on, but something kind of like a slow bleed, a slow bleed down, so like bounces along the way, which ultimately are just represent lower highs until we get some kind of final flush out. Maybe that happens in September, and at that point we kind of build a base for our next move higher into 2025. And I think whatever top we hit at that point, which I think was higher than what I can show you here on the chart. Let me see if I can extend this. Maybe sometime in 2025 we challenge 200K or something. I'm just making this up. I don't know if it's going to play out exactly like this, but yeah, I mean, I doubt we just go straight up, but something like that, right? So this is kind of what I'm thinking is likely, is kind of like a slow bleed and then a massive drop into the 45 to 50K red zone. This is a red zone, if you go to my past videos, I've talked about a lot. And come up, back test it successfully, and head back off to the races. If we cool off for like half a year, kind of like we did in 2013, there should be some juice in the tank. And we could cool off for even longer than that. Then there's even more juice in the tank for a move higher. And I think that if we get deep into 2025 with our bull market, which is certainly possible, then we could see this fractal, this giant fractal here, before we head into a bear market, be like a beautiful combination of 2017, 2013, and 2021 kind of all rolled up into one, with elements of each kind of in the fractals, right? You've got this move here, which is very similar to 2016, in 2017. Then you've got sort of like a 2021 distribution phase. You've got like a 2019 style correction, and you've got like a 2013/2017 maybe blow off top. That's kind of what I'm thinking is likely to happen. I can't imagine us going below this really strong support zone, especially with all this time that we have passing. We need time to pass. I mean, we had 7 green months in a row from 2023 to 2024. Only the second time that's ever happened in Bitcoin's, well, arguably the third time that's happened if you want to include 2010. But it hasn't happened often in Bitcoin's history, right? It's been many, many years for that. You're going to need some cool off. We hit a new all-time high before that happened. You're going to need to cool off. But altcoins haven't run yet. They really haven't run much. So I think something like this is kind of reasonable. As far as the time frame is concerned, I don't know, but I think this would reset the price momentum oscillator sufficiently to allow for a major move up. And it would also hit that really strong value zone that exists above 45K. Right? There's a lot of support here going back years. So breaking below 56K would be kind of not the best thing in the world, but I think it is likely to potentially happen. We could bottom there, though. We could have hit a higher low and then go up. I mean, I don't know. But I just feel like we need some more time to reset. Let's look at another metric that I'm very fond of, which is the money flow index. Now, I like to look at it as an oscillator volume profile. So I like to look at the momentum of MFI, not just static MFI. Let's take a look at that. Okay, so this is the money flow index oscillator volume profile on the 2-week time frame, which I've never looked at on this channel before. I've looked at the 1 week and other. I think mainly the 1 week is what I've looked at. I don't think I've looked at the 2 week. So this green bar up here represents overbought. The red bar represents oversold. When an asset is overbought, it's going to have a tendency to want to trend down. When an asset is oversold, it's going to have a tendency to want to trend up. Now on the 2-week time frame, we don't tend to get that oversold. I drew a horizontal line to capture as many touch points as possible. Seems around the 28.14 level, somewhere around there. We've had some pretty sharp reversals. We had such a reversal, if I ignore the first one, In January of 2012, we had a reversal below this line around at our minimum value, besides this minimum, which went nearly to zero. I would say around, let's call it 20. This was in June of 2018. We had a reversal there, although we did have, come back and test this trend line in December of 2018. That was before our 2019 run, which peaked out right here. And then we had another double bottom on this orange line in August of 2022 before kind of coming down in September of 2022, a little higher low. November of 2022, again a higher low, and you didn't really see much of an increase until January of 2023. So we never, and if you look at this white line up here, the white line, besides you ignore 2011, we reached that in April of 2013. Then we had a secondary peak in December of 2013. August 2014, the bear market of 2014, we didn't really come down that far, only at 34.87. Had a little bit of intermediate drop in May of 2016. And we made it up to about the same level that we were at in March of 2024. We made it to that level in June of 2017, put in a double bottom, and then came back up one last time in December of 2017 before we went into our bear. And then we hit this peak in June of 2019, came down in December of 2019, played around in the sandbox throughout most of 2020 before hitting this peak in January of 2021, and then hitting a secondary peak around October, November timeframe. So I think what was likely to happen here, because we haven't really had any significant peak until March, the pattern usually is that we come back up one last time. So this is looking a little head and shoulderies. Here's a head, here's one shoulder, the other shoulder. So I'm thinking this could drop some more. I don't think it's going to drop to the orange trend line, but I think we'll have another push higher. And I think that second push higher, it could be a higher high, could be a lower high, but I think we will make it up into this region one time again. And I think it may begin to happen in fall, late fall, mid fall, I don't know, sometime in the next few months. We'll just say that. And I think it could take us into 2025 for a cycle ending peak. That could be maybe around 200K. Okay, this is just looking at the data from here. You know that I can't predict the market any better than anybody else, but we're kind of like right at the midpoint, right? Of this is overbought, 86 level. Usually when we get up to these levels, we come down. This is kind of heading towards the oversold region. We can see that in September, October, we got to around 50. In bear markets, we get a lot lower, right? Even in 2019, we didn't drop too low. We dropped to like 42.95. So we don't touch this orange trend line very often. We also don't touch the white trend line very often. In fact, there's been very few touch points. If I were to move this down a little bit, this looks like kind of more realistic, more reasonable, but I'm going to leave it up here just in case we staircase our way back up again. So, that's something to definitely consider. Now, if we turn this to the 1 week, again, this is the money flow index momentum oscillated oscillator volume profile. It's a lot to say, right? You can see there's more spikes, right, on the weekly. And we have made it into the oversold region twice. So we made it there in March of 2013, and we made it there in December of 2023. Every time we spiked up on this, which we did in March of 2024, we came down. It's notable right now that we are actually at historical oversold levels. So what does that mean? Well, we could go lower. I mean, we have breached below this in June of 2022. We breached below this in March of 2014, and we breached below this in July of 2013. So that's 3 touch points. But we are at some pretty historically low levels of money flow index. So if we were to put a horizontal line in here, let's go ahead and put one. We could say that we're at a region where we have a lot of touch points and probably not a lot further down to go. I mean, so in 2022, this was during a technical bear market. Here's May of 2022. We reached the bottom of this just 3 months later. Okay. March 2018, November 2019, September 2016, April 2014. So these are all some pretty significant levels we've reached. The fact that we're down here right now indicates that there is a very high probability of a reversal coming in the next potentially few weeks to few months. So, do we have to wait for the fall for a reversal? Maybe not. I mean, again, things depend on what time frame you're looking on, but even when you got reversals, sometimes they stay down at these levels for a little while. It's not always just a straight shot to the top. So even if we did get a reversal here, it could just be another lower high before we come back down one last time, maybe. Okay, but we are at historically oversold levels. Okay, just by the sheer fact that we're on the red line, if I remove this now, we are on the red line. That is oversold by definition. And we tend to not spend a lot of time here. So this is probably good news if you're feeling bearish, that we likely don't have a lot longer to go before we turn bullish once again. But we are quite unlikely to breach this green line because we've only done it twice in Bitcoin's entire history. So, maybe we're looking to come back up to the 70s levels, maybe like our 2021 top, which was around 74. So maybe we come up to 74 or something like that as we head into late 2024, early 2025. We'll have to keep an eye on that. Something also to note, this is the 2-week ADX and DI. So the green is the bullish directional index, the red is the bearish directional index, and the white is the ADX, or basically the trend strength, average directional index. And anything above 20 is considered strong, anything below 20 is considered weak, and of course it increases with trend strength. So we are kind of peaking out on this right now. It looks like we're putting in some kind of peak around 58, which would represent the second lowest peak we've ever put in on the ADX. If that's a peak, it's not necessarily a peak. I mean, looking in 2017, it looked like we were peaking and then we just went straight up again. 2019 would be the lowest we've ever peaked out on, and that was sort of an echo bubble from the 2017 rally. So we also had a pretty low peak here in 2022, but that was in a bear market. I'm talking bull market peaking, right? So we don't really want to focus on that. The green DI put in a lower high. It almost looks equal to the high that was put in January 2021. This was in March of 2024. And then came down and is now, just kind of going lower. So what are we likely to see? I mean, it seems like we need to spend a little time chopping at these lower levels, but I think there's good odds of having a reversal. I'd like to see what happens with this ADX if the strength starts to weaken or if we see an increase in trend strength. This would be a remarkable lower high if it did happen. I anticipate we should be moving a little bit higher, especially as we head into the end of the bull market, whenever that is, if that's in 2025 or late this year. I really anticipate that this white line should move higher. I think this is a little premature to be calling for a top, just based, even if this isn't a descending channel of putting in lower highs, which I think is likely. I still think that there's room to move up. I think one way or another, we're gonna end up probably getting close to this here, top of this trend, and maybe we chop around here a little bit and then move our way back up with the green before coming back down. I don't know. I can't tell you for sure what's going to happen, but it just seems like we have 1, 2, 3, 4 touch points almost on this trend line. It would make sense to have a fifth. Okay, that's quite a bit of data. It's not just 2 data points; it's 4 data points. Okay, this is the 2-week average sentiment oscillator. And you can see similar to the ADX and DI, but a little more simple. When the green sentiment is pushing higher, red sentiment is pushing lower. When these are at maximum divergence, that is maximum bullish momentum. This happened in March of 2013, December of 2017, February of 2021, and it is debatable if it's happened yet. This is February 2024, with a little bump up in June and a little kink here in April as well. So could we see this come down some more? I think we could. But if you look at historical peaks, going off of, 3 peaks mainly. If we draw, let's see if we can draw a line here. Doesn't look like we quite got there yet, right? It looks like there's still some room to move up. Not a lot of room, but it looks like there's some. Could this be the first instance of a lower high on the average sentiment oscillator? It could be. I think we should be open-minded to that. But the green ASO hasn't really lasted for that long. I mean, being above red, it started in February 2023, so it's been like maybe a year and almost a year and a half, not quite. And if you look at past bull markets, we had April 2020 to August 2021, so it was about a year and a half there. This bull market went from August 15 to May of 2018 before the green came way down. And this one here would be March of 2012 till about May of 2014. So this does include bear markets, so just be mindful of that. We look a little similar, in my opinion, to 2013. So you see how we put in a peak in March, and then we had like a kink here in May. Sorry, this is March 2013. Then May of 2013, we had a little kink. We went down for a while, and then we came back up. I think something like this could definitely play out, but a more maybe extended version. So if I were to try to draw that out with a path, maybe, we continue to come down, and then we chop around a little bit, kind of into 20. Maybe this takes longer. Again, I'm not trying to put a time frame on this because that's a really dangerous game to play, but I do think we'll come back up again one last time. I think it's highly likely that we come back up. So, yeah, I'm not thinking that the bull market is over, but I am thinking we could potentially be in a longer lull. Of course, the 1 week money flow index oscillator volume profile seems to suggest that we may be closer to a significant bounce than the 2 weeks are saying. But either way, it does look like we have some more weakness in the cards. That seems to be the most likely outcome. Okay, so I'm pulling up the daily time frame for Bitcoin, and I want to pull up some key whole moving averages. I use these as instead of simple moving averages because they are more current and less lagging, and death crosses and golden crosses take on a lot more meaning with this, the whole moving average, than they do with the simple moving average. So you can see right now we had a death cross. Let me really zoom in on this and focus on it intently. We had a death cross of the 20-day whole moving average with the 100-day whole moving average. So just for reference, the yellow is 20-day, the blue is 50-day, the white is 100-day, and the red is 200-day. So we did have a death cross of the 20 with the 100. It looks like we're likely to get a death cross of the 50 with the 100, which is more significant than the 20 death crossing. Although 20 death crossing is not a great thing either. We can notice that the 200-day whole moving average has acted as resistance really all year. This has been a point of resistance. 70K is a point of resistance, and we're starting to head down on the 200-day. We could see a death cross of all these moving averages. It's possible with the 100. Okay, so just keep that in mind that could happen. So what I would like to see, well, I mean, that would be a golden cross, my bad. What I would like to see is the 100 to have a golden cross with the 200. That would be a good sign. But everything looks like it's kind of like moving down right now. We do have a green day, although it's not a very convincing one. You can just see all green. Any kind of price to the upside is just getting sold off pretty much right away. We are in an area of some pretty good horizontal support here. There's going to be some good horizontal support down here at 61K as well. There's going to be horizontal support also around 56 to 58K. So this is why I'm kind of thinking things kind of bleed slowly if they do continue to bleed. Let's pull up the Gaussian channel. So we can see in the context of these whole moving averages, we are right on the Gaussian channel median line. This is a key place to be. Now, the Gaussian channel did have a nice inflection. It is concave up, so that is good. So there is a pretty high probability of a bounce here. I just don't know if that bounce would be sustained. Like maybe we get a bounce to the 100-day HMA, which at that point could be sitting at 68.5K. Everybody gets really excited, right? Like, so we bounce here into next week, and then we come back down again. And maybe that time we break the channel. and this channel flips concave down again. This is a daily Gaussian channel, so it's not as stable as like a weekly or 2 week or monthly one. So something like that could happen. I would anticipate something like that happening, printing another lower high just to send us lower yet again. Okay, that brutal slow bleed. That's what I think is a definite possibility to happen. Okay, I'm overlaying the weighted logarithmic Bollinger Bands with the Gunnar EMA. The Gunnar EMA, which is this green and red band, has printed a bearish cross as of, it looks like yesterday, it printed a bearish cross. Last bearish cross was on April 15th, and it lasted for about a month. So maybe, we're going to see some pretty ugly price action for about a month if it's similar to what happened here. Bollinger Bands are opening to the downside. They're spilling out that way. That's our big move. Not really what you want to see. So, but looking up here around 68K, I think we could see, again, that mean reversion. Maybe it's already starting. We kind of get up here, but then only to get rejected yet again and come down further. Okay, sorry. And then we can do all kinds of funny stuff. Okay. I'm not the best with the path drawing tool, but you get the idea. I often look to the lower time frames to get a clue for what might happen on the higher time frames. You can see on the 5-day we have gone below the green Gunnar EMA, and with the red Gunnar EMA around 64K. So this takes a while to play out, but doesn't this look kind of like 2021 a little bit with 2019 mixed in? We've got the Bollinger Band starting to squeeze on the 5-day. I'm sure that on the 3-day they're squeezing even more. We're going to go down to that time frame. Actually, not really. Looks like the squeeze is bigger. Let's go to the weekly. Yeah, the squeeze is starting to happen on the weekly, 5-day, whatever. We're right at the Gunnar EMA and the median line on the weekly, so of course we expect some support there. So in general, I'm expecting us to come down just like we've been doing on the daily. I think this red zone is very much in play. I don't think we have to hit it, but because that would involve a bearish cross. If we come all the way down here, then the Gunnar EMA will have a bearish cross on the weekly. And the last time that happened was a really long time ago. That was all the way in, let's see, this is a bullish cross in February of 2023. Yeah, we haven't had a bearish cross in a while. And what about in past cycles? Let me turn off the weighted Bollinger Bands, make it easier to see. Because these crosses on the weekly time frame don't happen very often. Right now, we're in no danger of having a bearish cross. As long as we can stay above the red Gunnar EMA and kind of maintain strength there, which would mean if we could keep price action above 60K, which I'm a little iffy about, but I'm open-minded to the idea, then we won't get a bearish cross. We did have let's see, so this was a September 23rd. This looks like a bearish cross. Yes, so September 18th, 2023, we did have a bearish cross. That was quickly replaced by a bullish cross. See, we did very, very briefly. I think these are like almost right next to each other. And then right here in February 2023, we had a bullish cross, bearish cross in January 2022 that pretty much marked a bear market. We had a bullish cross in August 2021, but notice this, in the middle of our bull market, we had a bearish cross in June of 2021. I think we could see something kind of like this. I think it's quite likely, actually, that we see some kind of dump out that prints a bearish cross but quickly reverses to a bullish cross and gives us a little more time in our bull market. You can see previous to that, there was a bullish cross in May of 2020, bearish cross March of 2020, bullish cross February 2020, bearish cross in November of 2019. So this was during your accumulation range. Anyways, we don't have to obsess over this, but I think a bearish cross could form in the coming weeks or months. I think it is possible. I think it's quite likely. But I think it will be followed up by a bullish cross probably shortly after. I don't think we'll have to wait a year to get a bullish cross. And I think that next bullish cross may be a shorter lived bullish cross than this one here that has been going since September of 2023. So this is almost 3/4 of a year. Maybe by the time it crosses bearish, it's been close to a year. And then we get a little bit of bullish cross, and then we pick up and head into more of a bearish cross. We get a bearish cross, then pick up and head into a bullish cross. So in summary, I feel that while we are likely in for maybe a few weeks, maybe at most a few months of downward price action with, of course, higher lows along the way, or sorry, lower highs. I get those mixed up. Important difference. Lower highs along the way, potentially, right? As I think price kind of makes its way down, which I think is the most likely situation. I think we'll see a nice reversal, and that reversal, at the worst, to me, would come in the 45 to 50K region. And I think, at that point, we can kind of blast off or work on carving out a path for Bitcoin to start to move a lot higher. Anything is possible. I mean, this does look a little bit, kind of like I've said, a little bit like this distribution phase mixed in with a little bit of the slow bleed of 2019. So, yeah, let's see what happens from here. And I think that the most likely path is that we see a little bit of weakness, like I said, over the next few weeks to months. All right, well, I don't think you have any reason to worry about the bull market being over. I think that the bull market will resume and pick back up and have at least one more impressive leg some point, as potentially as early as the summer. Still could happen. More realistically, I would say late summer to fall. Sometime we're in that time frame, things could start to turn around on an election tailwind, and maybe the bull market continues to head into 2025, giving us a shot at those much higher prices for Bitcoin and some kind of blow off top to mark out the close of the bull cycle for this particular cycle that we've been in. So thank you for joining me in the crypto simulation today. Be sure to join my Telegram group, the Snack Pit. Link is in the video description for more chart analyses and discussions, and also a really cool community. Be sure to like, subscribe, and comment on this video, and also click that notification bell to be notified of future releases. I'll see you again next time. Bye.